What's going on, everybody, and welcome to another trading analytics video. So SPY had by far one of the worst trading days in a few weeks, actually, to close out the Christmas week. And it looks as if bears are now in full control of the market until further notice. While this is not necessarily the ideal scenario, it's not entirely unexpected, considering especially that we were in an election cycle and there is some historical precedence for the markets to see a little bit of a pullback the week of Christmas before getting into their full rally around the inauguration day. However, um, let's talk about what's going on in the immediate short term for the overall markets. And we're looking at things like SPY flashing a bearish signal for the first time in a while, where we have this head and shoulders like pattern forming on the daily, likely putting us in an area where we're going to retest the weekly trend line, which is this big yellow line here, or daily trend line, I'm sorry, which is this big yellow line here to put us back down around 589, which also coincides with the key level of support for the ticker that has been established over the last month and a half or so. So as long as the bulls continue to hold 589, there's a good precedent for a chance that we're going to bounce from this zone, likely to retest the shoulder of the head and shoulders pattern, which will put us back up to about $600 on SPY. However, a loss of this support slash trend line support is pretty bad news for the bulls in any scenario, because that would likely bring us back down here to 576 to fill these two gaps. And then if we continue further down, we're going to likely test the key level of 567 support. So, a long story short, the bulls do not want to lose the 589 level for SPY, because if so, 576 comes rather quickly, and then after 576 we're going to see 567, and those are figures that we have not seen on SPY since October. So that would firmly put the Santa rally to bed and have us in a state of a full-on market reset, which again is not entirely out of the question, because we've ran so hotly for so long on this crazy run we've been having. So again, just watching SPY very, very carefully. 589 is a very key level. You don't want to lose that at all. So we'll see how that plays out over the course of the next few days. I'm still leaning that if that 589 level support holds well, we can see a little bit of a bounce back to the mid 590s and $600 level. But that's kind of being wishful right now, considering the bearish pattern forming on the ticker. Now, jumping over here to QQQ, it's a similar story to SPY. If you actually take a look, we actually bounced off of a key support at 518, and we got the close around 522 on the at the end of the day of trading. But similar scenario, we have a daily trend line here, which if we lose the support at 518, would likely put us around 515, 516 for a bounce, but that puts us again right underneath that support, which is not an ideal scenario. So the bulls don't want to lose 518, and they definitely don't want to lose 515 for the trend line support, because that's going to bring us all the way back down to 504 to fill these two gaps here. And if we lose 504, then we got a long ways down to mid 480s on the Qs. So all in all, that kind of puts us in the same situation as SPY, where the bulls have a clear key level to defend. And as long as that level holds, you could probably play short-term bounces for scalps from those zones, because until the bulls show that they have no more strength left in them to close out the year, then there's no reason to take low risk. There's no reason not to take low risk entries on those key levels of support to play the bounces from there. Now, when you're looking at the Qs, you want to take a look at some of the big players. So one of them is Microsoft, and this is something that has had an interesting 2 weeks, right? Flash bullish off of a cup and handle, inverted head and shoulders pattern on the day. We got a nice little run, then we got a little breakdown, and now what are we doing? Well, if you take a look here, excuse all the lines, you'll see it a little bit clearer on the hourly. But we're just having a neckline retest here, right? Because this level here at 427 was the neckline. Look exactly where we bounced from on the massive downside trend that we had. Broke through key level support, bounced off the trend line, reclaimed that 428 level, and then we're kind of hovering around there. Likely for a chance, if this holds, we're probably going to look to retest the 436 resistance point. also partially closed that gap. But jumping back over here to the daily, you'll see that again we had a neckline retest from that inverted head and shoulders break, and we bounced from that zone. So it's very, very important. Again, the Bulls don't lose this. As you guys know, with Microsoft, it's very easy to play Microsoft's key levels. Um, the only thing that sucks is when the key levels break in pre-market or after-market trading, because then you can't really do much about it if you're trading options. But again, looking at it from here, loss of 428 is going to put 420 on the cards. We're going to fill this gap here at 415. And then if we lose 415, we're going back to 410, which is a very, very, very key support. That's why it's so thick here. Microsoft's 410 is one of the major supports on the ticker. And if we lose 410, we're going to 397. So we don't want to lose 410 at all. And that all starts if we lose 428 on a daily candle close. Until then, again, just similar to SPY and QQQ, you can probably play the bounces from those key levels of support just to see if they're holding. And as long as they hold, you got scalps towards the minor upside and retesting back down to that support to test. So that's what's going on with Microsoft. Again, neckline retest across the board yesterday during the trading session, and it's very important to see how the bulls respond to the bears' gut punch. Now, speaking of gut punches, NVIDIA has had a pretty brutal end of 2024 after being literally the best performing ticker in the market for 2023 and most of 2024, right before it got surpassed by things like App and other names. But taking a look here on NVIDIA, if you see here on the daily chart, you see two trend lines. You have an uptrend line, which we lost a few weeks ago, and we retested a couple of times. But then as you see, we actually established a clear downtrend line. So NVIDIA has been flashing bearish with these downward signals for quite some time now. And the fact that it's been unable to reclaim the uptrend line here at 148 has some cause for concern. But again, similar to Microsoft, NVIDIA has some key levels you want to outline, and that being 136. And I'm going to jump over here to the hour so you can see a little more clearly what I'm talking about aside from the downtrend line. So for me, NVIDIA is it's okay to go short NVIDIA if we lose 136 on any significant time frame. And as long as we hold above 136, you're probably in the market for a short-term bounces as well. Now, looking here on the hourly chart, you see that we have quite a bit of room because we have a gap fill, which will put us to retest the downtrend line here at 139, but also that puts us on pace for that neckline retest here at 138, which is a little, what, $1.50 from where we're currently at the time of the close of market close. But I do want to say that with NVIDIA, again, as long as we hold above 136, that's a fairly strong signal because that support has been very important for quite some time on this ticker as well. Now, again, anything below 136, specifically on the daily, you can short, because if we lose 136, we're likely going back down to 128. And if we lose 128, then we're going to go back down to 122. So those are the key levels of support on NVIDIA. And as long as that downtrend line holds true, then that's pretty much the range we're going to be playing in. We're going to probably work up to 139, drop back down, 136, 134, 128. And if we catch that support at 128 and bounce again, it's likely going to retest the downtrend line until we get enough volume to break through the upside. So in any case, that's what I got for you guys today. Those are the names I'm watching. NVIDIA, Microsoft, of course. You guys know I love Microsoft. But NVIDIA is probably the most consistent ticker in terms of how it's been respecting the trend lines up and down for the last few weeks. And then, of course, you have SPY, QQQ, which have been holding key levels. And the fact that they both reclaimed key levels before the market closed was very important just overall, because had those stayed underneath and we got the closing bell, then New Year's, we're going into a bloody week. So we'll see how we go. We had some massive selling at the open today. And it's kind of important just to see overall where the market wants to settle once the week starts on Monday. But those are things I want to look at and highlight. So in any case, again, I've been TradeRunner. This is Trading Analytics. Link to our Discord in the description of this video as well as in our channel bio. So feel free to check that out. And we'll see you guys in the next one. Thanks for watching.